The second important way we classify the cost is by direct cost as compared to indirect cost, depending on the relationship with the underlying cost object. The cost object can be a department, an activity, a project, or an item that we can directly trace and accumulate cost. For example, a bottle of the Coke, the whole accounting department, the activity of new employee training, a company picnic, or fundraising activity can all be a cost object. After you identify the cost object, then we can examine which costs are directly happened related to this cost object. And then we have indirect cost that can be allocated to this cost object, but not directly responsible by the manager of the cost object. So for manufacture cost and non-manufacture cost, depending on the cost object you identified, we can have different ways to examine the direct cost and indirect cost. So for example, if we use a bottle of the Coke or a couple of bottles of the Cokes, the direct cost, we already have the answer in the chart, right? So why we call direct material and direct labor? Because those cost items are directly can be traced to the bottle of the Cokes, like the ingredients, like the direct labors, can be directly traced and accumulated by the products. But the manufacturer overhead, I put a parenthesis as indirect cost, such as the depreciations, insurance, and utility expenses for the factory. They support all of the products in the factory setting, so not can be traced to a single bottle of the product. So either supporting indirect cost can be allocated later to the units, but not directly traceable to each unit of the products. And in the non-manufacturer cost, such as in the marketing, admin, and general expenses areas, you can define many different types of cost objects. If we define a sales department as a cost object, so my cost object for responsibility is the sales department. Now we can check what are the examples of the direct cost for the marketing or sales department. So you can easily think about the payrolls, all of the sales personnel, like office workers, salespersons, and the department managers, all of their payrolls and benefits. Then the advertisement is normally controlled and planned by the marketing department as well. And then they have their regular office expenses and other direct cost. Then they also have indirect cost, such as the utilities shared by the entire office building and the company-wide overhead allocation. So like the CEO's salary and some overall company management cost and expenses. So as the manager of the sales department, now you can tell why it's important we differentiate direct cost and indirect cost, because most of the direct cost can be directly controlled and changed by the decision of the sales department. So means you are responsible for the level of the cost. And when we can use the budgeting system, so we set up the budget for the marketing, then you can easily compare the actual cost with the budgets, right, to tell the variances. But the indirect cost, most of the times the sales department wouldn't have a direct control, like the utility rate or usage and the company-wide general overhead. But they are responsible indirectly because of the allocation of this overall, like the general overhead. So we'll talk about this allocated company-wide overhead or general utilities in the segment reporting, but at this point of time, always be careful. Not only you can differentiate direct and indirect cost when they identify a cost objects, we understand the reason why we have these classifications, majorly due to the cost control and responsibility purpose. So when you work on a like multiple choice question or some other concept type of questions, before you say this item is direct or indirect cost, you make sure you understand which cost object they are referring to the classification. So that's the second way. And then the other way related to the manufacturer and the non-manufacturer cost is the cost classification in preparing the financial statements, where we disclose the related cost in the different pieces of the financial statements. In this classification, we have product cost and then period cost. I sometimes use the product cost and the manufacturer cost interchangeably because when you say product cost is majorly referring to the manufacturer cost, so the cost directly involved in making the products. But this financial statement preparation purpose, so we are checking where we are going to disclose all of the manufacturer cost involved when we report the periodic financial statements. To summarize, in the end of the accounting cycle, all of the costs involved in acquiring or making a product will be disclosed in the financial statements. Either they reported as inventory in the balance sheet. So balance sheet, we have inventory assets. Or for the cost related to the sold inventories, they will be disclosed as the cost of goods sold in the income statement. So depending on the stage of the manufacturer cost, if the manufacturer cost, for example, they still remain as raw material unused or started unfinished products, we call work in process inventory, or we finished but unsold. All of the three categories will be reported as inventory in the balance sheet, current assets. For the finished and sold units, will disclose their cost in the income statement. But overall, they are called product cost. So it reflects the appearance of your manufacturer cost in the different position of your financial statements. If you are a merchandising company, right, so like retail stores, department stores, or wholesales, they buy and sell, they don't make their own products, then their inventory only includes the merchandise inventory. So that's like you talk about in 231. We have merchandising inventory in the balance sheet and the sold inventory cost in the income statements. So product cost. Then period cost, basically referring to all of your non-manufacturer cost. In another way, we call selling, admin, or general expenses. They will be disclosed by the total in the income statement. So no separation, okay, no way they will be reported in the balance sheet because they are not product related. So total will be in the income statement. So they are not related to putting down as the inventory cost. So in another way, they call non-inventoriable cost. For whatever the amount happened in the month or in any period, they will be summarized and reported in the income statement. And in different companies, the name for this category may be slightly different. Sometimes they just call, like the name, SG&A, selling, admin, and general expenses. And sometimes they separate them into they call operating expenses. Then they'll show depreciations, payroll expenses, research and development, all restructuring expenses. So the names can be different, but the general feature is they are not manufacturer related, and they will be summarized and deducted in the income statement directly or not related to the inventory cost. So those are the three, I would say, important ways we classify the cost concepts or depending on the purpose. For financial reporting purpose, for cost control and responsibility purpose, and also for the identify the true cost of the products. Because if you want to find out what the true cost to make any type of products, like a car, like the Coke, or refrigerators, airplanes, right? So you really need to go back to their fundamentals, material, labor, overhead to find the true cost per unit. And that's become the foundation. We understand the cost information, also setting up the right sales price when you sell to the customers. And the price should cover your cost to make the products and also cover your non-manufacturer overall expenses, right? So before you can make the profits, that's really reflected in the income statement. So we first use the revenue minus the cost of goods sold. You got the gross profit. Then the gross profit needed to minus all of the selling and selling admin and general expenses. So we got the net operating expense. So the three different ways we are covering here are not in conflict with each other, or is depending on the angle or the purpose you want to examine and understand the cost behavior. So those are the three fundamental ones. And in the next video, let's talk about the variable cost and the fixed cost based upon the cost behavior.